We did have Warsh today, hold rates here in the U.S., and I put out a tweet yesterday before that happened. I said it doesn't really matter what the U.S. does, whether they raise, whether they lower, whether they hold. All of it leads to the reverse carry trade. And I really mean that. Like, Japan is in a spot where their yen continues to depreciate against the dollar, and us holding rates strengthens our dollar, and they need to strengthen their currency against ours. If they do not, their yen will collapse. With all of the inflation across economies because of the oil and the conflict in the Middle East, they're really kind of backed into a corner here. So if they can't lower interest rates, because then their yen becomes even weaker, and it would cause hyperinflation in their economy. They can hold, but even if they hold, it only lets it go a little bit longer before their currency collapses. They need to do something now. They're already at the upper bound of where they've been over the past 30 plus years. And if they raise, the reverse carry trade unwinds. If we had lowered, the reverse carry trade unwinds because it becomes more profitable to hold their bonds versus our bonds, because our bonds would drop in value. We held, and so, we didn't rock the boat one way or the other. And what's weird is this month is the first time that I'm aware of that we've had an FOMC before their meeting. Normally it's them, kind of setting expectations for the market, and then we kind of follow along behind that. So for us to have ours first is a little bit different than we've seen in recent history. And it'll be interesting to see what Japan does here at the end of the month. I do anticipate that they're going to have to raise rates. They are posturing at the moment that they are going to hold at 1%. I don't buy it. I don't buy it. We did have Treasury yields drop a little bit today for the U.S. And that could be, that would be an indication that people are buying U.S. bonds, anticipating a rate hike, which we didn't get. There was some speculation over there on Polymarket, like 25% chance that we would see, Warsh raise rates. They've postured that they're going to do that, but inevitably they're going to have to lower interest rates here. We need access to capital. Inflation's running hot. Jobs numbers are coming back in places that, their mandate is inflation and to hold job stability for the populace. And both of those things are running hot at the moment. So for them to hold, not really, but they can't lower. Like I said, if they lower, everything else burns. And they're aware of that. People would normally correlate lowering interest rates with stocks going crazy and people moving to risk on, people taking out, more debt, more leverage.